Hi, I'm Morgan Hines in the Phocuswire studio, and I'm here with Matt Zito of TSI and Min Liu of Cambon Partners. Welcome. We're so excited to have you here to talk about M&A today.
Happy to be here.
Yeah, thank you very much for having us.
Of course. So last year, travel M&A activity was heating up. Obviously, technology is a big focus there. Is there anything in the space that really stands out to you right now?
Yeah, you start. I
Yeah,
start.
sure. So, I mean, it's definitely heating up. I would say, we're on top in the M&A market. I work with a lot of founders, and I have a saying like, when you're on top in the life cycle of a company, you have like signals. And I would say for the M&A side, we're definitely on top. Like, there's a lot of activity coming from both buyers and sellers. Yeah,
If I can complete, I think we have own deal database called the bank.travel at Cambon, and we recorded like 470 deals this year. And I think 1/3 of them occurred in the travel technology sector. And 60% of that is really SaaS business. So this very robust performance compared to last year. And definitely, very vibrant market in travel technology in general.
That makes sense. So when you're saying that you're on top, and you've obviously given us a tangible example, which is great, what stood out to you both as that moment of feeling like, wow, things are really good right now in M&A?
Yeah. I think when you start seeing like not just engagements of interest, but like the real stuff, like letters of intent, companies doing due diligence. The more LOIs you see, the better. And so, I'm a small firm, and we have 3 LOIs right now of companies that are going to probably close by the end of the year.
Wow.
So,
Yeah. And on our side, I think we are helping companies doing consolidation. We're working for, different verticals, for instance, hospitality technology sector, leisure travel, corporate travel technology as well.
Yeah.
So we, for instance, earlier this year, we helped TravelSouth Group acquire 3 companies in a row. And we are running a lot of, we closed a few transactions in the hospitality tech as well.
Okay. So how does all of what's happening this year compare to last year?
I would say that it's just amplified, really. There's like a convergence of stuff that's going on. One is you have, the strategics, which are a big important buyer in the travel industry. They realize that we're not going to go into a recession. We didn't go into a recession, so they've got now more money free up on their balance sheet. They're coming out of COVID. Their earnings are improving. They're beat it up. They're some of the highest it's ever been. So they have this cash now that they can deploy, right? And then from the owner operator standpoint, on the sell side, you have a lot of companies in the travel industry that have been run by baby boomers. They're 60, 70 years old, and they need to sell, and they want to sell, and now's the time for them to sell. And so there's a lot of buyers in the market right now that can buy that. And that dynamic wasn't there as much last year, I would say.
Yeah, totally agree. I think for instance, in the aviation sector, a lot of legacy software owners need to, hand on the flag to the new generation. So there definitely will be transactions over there. And also another point I want to add is private equity firms, for instance, have accumulated like $2.5 trillion that they need to deploy.
Yeah.
And there are still many deals that have occurred prior to COVID. So now it's a good time to exit if they haven't done it yet.
Yeah.
If I could just add to that. And the other thing, I think that COVID was like a really huge impact, obviously on the travel industry. But, it's brought, there's an interesting dynamic too with the founders. So, a lot of founders and owners that are not, they're not going to retire. They're not baby boomers. They're in their 30s, 40s, and they went through the COVID. They want to take some money off the table. I'm seeing that. Like some of my deals, like Matt, can we take some money off the table? And so I'm actually helping some founders execute on that. And they might not sell the whole entire company, but they're selling a pretty large stake of it.
Yeah, but some of them are really investing as well.
Yeah,
because the valuation gap between sellers and buyers are closing really.
Yeah.
And some still really believe in their business. They want to keep the upside potential for themselves. So they reinvest significantly in the business. So that's good trends as well.
So as things are it seems like a lot of stuff is happening right now. So what are the biggest trends that you're seeing in M&A at the current moment?
I would say consolidation.
Yeah, consolidation. Like you say, like consolidation. I mean, definitely consolidation, and but it's I'm seeing it in like all verticals. I'm not seeing it just in like airline tech or hotel tech or IT tech. It's really like it's broad based across the board. Like I don't think there's one vertical trend that's better.
No. Oh, yeah, across the board. I think you're right. Yeah.
Is that a unique kind of, or is that something that often happens when you see an environment like this?
Like it's the confluence of all these things occurring at once, and then also too like the private markets. I mean, at least here in the U.S., we're at the highest, some of the highest New York Stock Exchange, NASDAQ in the history of American companies, and that's driving a lot of it too. Obviously,
Yeah. The overall background is really good because people are now more assured about economic stability, visibility, and interest rates are lower, and investors are coming back. We see in travel sector even general, not travel specific investors are coming back as well. So yeah, definitely there's the overall trend is good, and people are more confident in doing deals.
Got it. So back to your point about consolidation, when you're thinking about the businesses that are seeing consolidation, what kinds of businesses are kind of ripe for consolidation? I know you mentioned it's happening across verticals, but is there a certain kind of business profile that is really just the right fit for that?
Yeah, and I think when you think about consolidation, you often think about how to get more revenue. So corporates need to focus on getting more revenue, but in an efficient way, right? So they do this because they need to expand their product offering, they need to increase their client coverage, they need to expand in geographic areas. So those are reasons for them to do consolidation.
Got it.
On the other hand, we see there's labor shortage in the industry, etc. So a lot of cost optimization needs to be done.
Yeah.
Then in that case, people want to use technology. They want to go through the digital transformation for them to, to be more efficient, etc. So probably this is one of the drivers behind the technology consolidation, for instance, because when company consolidated in the travel space, they can offer more technology modules and just like end-to-end platform to those who need.
Yeah. Do you have anything to add?
Not really. She covered it. Good job, man.
Okay, so as we think about M&A targets, are the valuations at the right level? I know that there was some bolstering, it sounded like, in the past. So what are you seeing there?
Yeah. I think that's a really tough one. I would say from my standpoint, what I would say valuations have like come down a little bit, maybe more normalized. But at the end of the day, there's some companies that, if you're highly profitable and you're growing at 25 or 35%, you're just going to get a way larger multiple than a company that, maybe doesn't have as much EBITDA and is flatlined or growing. So.
Yeah. I think that's true. We see top companies, best in class, with hyper growth and some profitability. For instance, they can get between 20 to 15 times ARR.
Wow.
That's really the top performers.
Yeah.
On the other hand, you have companies that grow slowly. The process takes longer to close. But for those who need that kind of modules or products, there's still buyers, but obviously with lower valuation.
Got it. And as we're talking about the reasons that a company might be ripe for consolidation, it got me thinking a little bit about AI and what we've seen in the last year and how that's changing. Obviously, last year we saw a number of acquisitions related to AI. Do you see that kind of pattern continuing, or that kind of, has the attitude towards AI technology and the companies producing it changed, or does it remain exciting and the same?
Yeah, I would say I think it's sort of the same. AI, I think, is a really big bucket, right? So we talked about this a little bit the other day, and you got the B2C and B2B, and we actually sold an AI company a few months ago in the trip planning space, and I would say that there was a lot of interest, but when it came down to the real buyers, it was a small amount, and to be honest, I was a I was a little shocked. Maybe that's not the right word, but I thought there would have been more people that, would want to acquire it. And so, I think a lot of these, the travel industry moves really slow, and it's really hard to get new innovation to be adopted in the travel industry. I talked a lot about this on LinkedIn and everything, and it's just going to take time. Yeah. But there, from the B2C, I think with the AI, the biggest adoption I'm seeing, and I think it's going to penetrate, is on the travel agency side.
Interesting.
With the AI, and I'm seeing a couple companies that have the ability now to actually have a conversation and actually do a booking. It's going to improve and get better and better. So on the B2C, that's an application I'm seeing that is very valuable.
Yeah. Within my clients universe, I think what I see is it's very difficult to get a transitional model with AI. So you cannot really do booking, etc. But they start to use AI to really streamline operations. So what they can do to help the back end, that's the first step. And then they notice that it's very expensive to deploy a model, even small model. I think they need to find a way to do that. I agree with you that for maybe B2C consumer side, maybe one market is like niche OTAs, they can really apply quickly because they have that data. I think.
And the travel agent desk as well as we're seeing it.
Yeah.
And then I can also add to that on the B2B side. So I have a buy side client that one of the technologies they have is AI, and they utilize AI to fix broken APIs. So when the code breaks, which happens a lot in the industry, it actually monitors it, says it's broken, and then writes the code and fixes it automatically. Wow. So it's something that could take potentially days is now done in minutes. So that's a really cool application of AI.
Yeah, totally agree. Yeah.
So I want to shift gears a little bit. I want to talk a little bit about startup funding. Obviously, there's been kind of a cold spell for funding since last year for startups. How do you see that continuing? What are the trends that you're noticing there?
Yeah. You want?
Oh, yeah. Okay, I can start. Yeah. I think last year, 2023, was lowest in terms of volume in the past 10 years. I think this year definitely is on rise.
Yeah.
So we still have 1 month and a half to see. But yeah, I think we are at the beginning of a new cycle.
Okay.
Yeah.
And go ahead.
Yeah, I agree with Min. And I think also too, one thing, so I've been involved with startups pretty much, for the last 20 years, and definitely the valuations have come down on, the COVID, after COVID, the funding dried up, and stuff that was worth 40 is now maybe worth 10 or 20. I mean,
wow.
So a lot of stuff got cut. Yeah, it got cut in half. So that's really difficult for entrepreneurs and founders that raised at really high levels. And then also, I think from the funding standpoint, their investors are, some investors, most want growth, right? It's at all costs. I just talked to a company that just raised 80 million. It's growth at all costs. But there's a good batch of investors that want companies that are profitable. They want them to focus on profitability. So I think that is something different that we haven't seen.
Yeah, exactly. I think we see more and more funds go to late stage companies instead of a very early stage.
Yep.
So there are a lot of fundraising at the moment on the market with, for instance, Muse, Lighthouse, different others. Yeah.
So what's the most appealing to each of you right now in investments?
It's most appealing. What's appealing to me is everyone wants to do deals. I love it.
Now, we want to make entrepreneurs happy, our clients happy. If they are happy, we're happy.
Okay.
Yeah.
And when you're looking to work with a company, maybe seeking funding, what's the biggest green flag for you?
Well, I mean, a company that's seeking funding, I would say one is the burn rate, how much are they burning of their capital, and how do they manage it? Because most of the companies that I've either invested in or been a part of and seen, a lot of the failure is because they just don't manage their cash. A lot of people think it's because they don't get the cash, but what I see it is it's opposite. It's actually they don't know how to manage it and they spend it.
Yeah, exactly. I mean, there's really this use of funds. How you want to allocate your funding? I mean, that's the first question investors will ask. Whether you want to invest in your business growth, whether investing in, optimizing your workflows, whether you're investing in M&A. So we need to be clear on that side.
Yeah. Got it. And is there an area in the travel industry that needs more innovation that you're not seeing fulfilled by startups right now?
I have a sort of contradictory view on this.
Okay.
And that is that I think there's a ton of innovation in the travel industry. It's the travel industry that doesn't adopt the innovation. It's really, especially on the corporate side, it's really, really hard to get adoption for new technologies and innovations. I don't think there's a lack of innovation and technology in the industry.
Yeah.
There's not any specific space at all that needs more.
The airlines need
Airlines, totally agree. Yeah.
Airlines, right?
Yeah. Yeah, and I think there should be a moment when airlines need to make a decision how they want to move technologies going forward.
Yeah.
Then aviation technology companies, they are suffering as well because the industry is just moving so slowly. But they can really add something to the carriers. So yeah, airports, carriers, etc.
Airlines. Yeah, I say that.
Yeah. Well, that's a great note to wrap up on. So thank you both so much. Really
Thank you, Morgan,
appreciate
for
you
having
being
us.
here.